Time to check in with Amanda Lang, business reporter with BNN Bloomberg, and of course, co-host of Taking Stock, which you can listen to anywhere on the Iheart Radio network. So, Amanda, lots of news this weekend here in Canada, starting off by the news today that our economy grew by 2.1% on an annualized basis during the second quarter, which always kind of begs the question, A, is that good or bad? And B, is it good or bad with respect to interest rates and where they're going?
So it is good in the sense that it's better than expected, and it's certainly better than the Bank of Canada expected. It's not good in terms of a great GDP number, although it's a very Canadian number. We don't do much better than 2.5% in good times. So it's pretty good. When it comes to the Bank of Canada, it does leave the door wide open for rate cuts because the economy is doing well, but the labor market is soft and inflation is coming down. So that all kind of adds up to they're sort of safe to proceed. And we're seeing economists there are now leaning more and more towards not just a September cut, which everybody kind of agrees on, but that we may well get two more before the end of the year. So that would be pretty significant.
Yeah, how realistic? I saw one person today kind of taking a wild shot at this one, suggesting maybe we get all the way down to 3% by the end of the year. You think that could happen?
I highly doubt it. I think that would be a calamity. Something would have to go very wrong for that to happen. But you might get down to below 4%. You might get to 3.75, for instance. I think the most aggressive I've seen is 3.5. But you certainly could see 3 on the horizon. You could say maybe sometime next year we see 3%. Now, it sort of depends what kind of camp you're in. If you're in the camp of 3% is a little bit too low for our economy, and that the historical norm would be closer to 3 3/4 or 4, then maybe you think the bank tries to hold there and sees if the economy can handle it.
Fair enough. All right, let me bring up the other things, part of the economy. Canadian banks, the big banks, all reporting this week. What did you see there? I know the RBC number was huge. What about the rest of the sector?
It was a really mixed bag, and we've been saying for years, lumping them into one group as though they're the same business is a mistake. They're so individual now, and you really saw that this quarter because, RBC doing great. We saw TD struggling with some of the write-offs it's going to have to do to deal with it's the kind of the risk side of its business and some big penalties it's paying. And we had CIBC saying its U.S. commercial loan business is actually one reason why it's doing well and feeling good. So a mixed picture, but overall I would say one of health. The banks have set aside provisions for loan losses, which we like to see. It's a kind of a conservative thing for them to do. And we're starting to get into the period in the next 6 months or so, where if they were overly conservative, it looks really good for them. It starts to turn into profit that they've, money they've set aside that they don't wind up needing, which would be a best case scenario.
I would ask with respect to RBC, and I know some of it has to do with them taking over HSBC, so obviously that's accretive, I would guess, to earnings for them. But in the case of TD, it's not often we see, at least not that I'm aware of, where we see a bank get actually downgraded. Moody's downgraded TD this week.
Yeah, I mean, TD is in a bit of hot water that isn't just a matter of paying a penalty and moving on, because it may find its balance sheet is sort of impaired a little bit. Not to use it, I don't mean that in a technical way. I just mean they may have less flexibility for a while in terms of what they can do, because they not only have these billions of dollars of penalties to pay for wrongdoing at their U.S. Their acquired U.S. bank, but also the regulators will be watching them very closely. So it puts them in the penalty box in a way that analysts don't like and might keep pressure on the stock for a little while.
All right, I want to move on and talk about EVs. This has become an issue not just federally, it's a big issue here in Quebec as well. We found out yesterday hydro rates will be going up. We also, just like the feds have all been told, come 2035, we're all going to have to be buying new EVs, not hybrids or gas-powered cars. And then yesterday, I guess someone came out and said, you know what, in order to hit sales targets, we're going to have to see the price of EVs go down by roughly 31%. That's a giant drop. So how unrealistic or realistic is this to imagine we're going to be in this kind of a situation by 2035?
Yeah, to hit the federal targets, this is the Parliamentary Budget Officer, Yves Giroux, reporting, saying if you want to hit your targets, there are a few things you can do. One of them is EVs have to be a lot cheaper. Last year, 11% of newly registered vehicles were electric. That is not enough for us to hit our targets. The other thing you could do, he's not saying you should go up the price of them. He's just saying if you want to spur sales, that's probably going to have to happen. The alternative is to make regular cars more expensive. And of course, one way to do that is to put a big old carbon tax on. So there are other mechanisms that could get us to this very lofty goal of every car on the road being electric in the not too distant future, but a big target, 60%, I want to say, by 2030, which is, that's around the corner and we're not even close to it. So basically the government has to do something. We are seeing incentives for EVs coming off, and that is affecting sales. So I guess one option would be to put the incentives back. We don't know whether that's going to happen everywhere, but that would be the other argument, is if you want this to happen, give people a reason to buy them.
Yeah, it's interesting because I read a story suggesting as well, EV sales for the big three are not going anywhere near as well as they thought. In fact, they lose money on every car they sell, and it's the thousands, apparently, on cars that they sell now. And then, of course, you have Canada about to impose this tariff on Chinese EVs. I'm kind of wondering, a 30% drop just to sort of get you in the game, it seems wholly impossible.
Yeah, I mean, it is the whole decision not to allow cheap foreign EV cars into our market was one well taken. Everybody understands why. It does mean that we are going to have more expensive cars here. And I think your point is really well made. I've always been shocked. The profit margin per vehicle is terrible for the most part. And, you can make more on a profit margin basis selling a cup of coffee than selling a car. Yeah. And so when you start to get into pricey new things, new materials, new technologies, there's definitely a period where they're not going to make as much money. Over time, they'll make more and more. So yeah, this is one where, but we've bet big on this, right? We want to own part of the supply chain. Our government has put billions attracting companies here to make us part of that supply chain. So we're all in on EV one way or the other.
By the way, with respect to that 100% tariff, and I know we're sort of trying to do the same thing they're doing in the U.S., but we were talking about this earlier in the week. The European market has done this a little differently. Yes, they have those in place, but the tariffs seem a lot smaller. Is 100% over the top, or is that, do you think, entirely necessary?
I think necessary because the message is we won't take any of them. Basically, it's a real deterrent. And necessary for us because we had to match what the Americans were doing. The reason this was a bit of a foregone conclusion was when our largest trading partner slapped those tariffs on. If we want to maintain our role in the North American auto supply chain, we probably have to be in step. We took our time. We pretended to think about it. It was a bit of a done deal once they had done that. And we have good reasons for it. I mean, the Chinese have a history of selling product into our market at below their cost of production, which puts our folks out of business in a hurry. So that was the argument we've used, but the fact that the U.S. did it meant that we were very likely to do it as well. And
are you expecting, I think we're all expecting something in terms of retribution here from the Chinese. Yeah. Where's that going to hurt? I mean, it seems likely that they'll do something. The fact that they haven't done it yet means maybe they'll keep their powder dry. They have done this in the past, so we know they're willing to do it, but it's just something we're going to have to live with because the new reality is that the U.S. is taking this much more protectionist stance against China. We're probably going to have to follow suit in other things, is my guess. And so we're all going to have to find our way to an equilibrium where we're not just having massive trade wars. China does know that it hurts its own consumer base when it puts big tariffs on the imported goods from our countries as well. So there's a bit of sort of realism around what they can and can't do. All right. We will leave it at that. Amanda, thanks so much. Appreciate it. Always a pleasure. Have a great weekend. You too.